What's up, everyone? This is going to be a trading recap on ContextLogic, ticker symbol WISH. Stock moved pretty well today, and we're going to go ahead and talk about a mistake that a lot of traders make, especially when they're first starting out. Something that I used to do all the time when I was first starting out. But we're also going to look at a correction that I took and why I took it, and why I think this is a great long-term hold. So we bought this stock today. We've been actually looking at holding the stock long for pretty much this whole week, and we'll talk about why. But anyways, today ContextLogic took off at 10:30. We had this nice massive bull run. I instantly started charting out this breakout triangle that it was doing, just like this. We have some divergence here on these two candles. You can see we created a high here and then another high, but our RSI is showing the inverse of that, so that's bearish divergence. First off, when you have a stock that has an incredible move like this, just out of nowhere, you can go ahead and ignore these classic trading indicators because they don't always work. In fact, I'm confident that these classic trading indicators and these classic trading patterns don't work more often than they do work. You can even see here that this bullish breakout triangle completely got rejected and failed. So it's just, personally I use stuff like this for reference and not at all to make, big buying decisions with or anything like that. So you can see here where this bearish divergence got rejected. We created another new high despite that. And we also failed on a breakout triangle. So two classic indicators failing and not working. There are way better ways to trade the stock market than just looking for stuff like this. If these things worked, then if basic classic trading patterns worked, then everybody would be millionaires. They just unfortunately do not work more than they actually do. So you have to be super careful. So let me pull my trades up here on the screen. So we are buying up this triangle here, and I'm kind of ignoring that, like I said before, just ignoring this divergence, just kept buying it up. We sold everything at the top here because this got double rejected here. So that's why we sold off. I was planning on buying the dip again, but I was waiting for it to give back much more than this. I was surprised that it didn't give back more than this, at least down to our 200-day EMA down here. I thought that would be much more likely to hit sooner than later because of how volatile it was today. Because it didn't get down there, we reset and we started breaking out of this resistance here again. Like we broke out once, twice, and then 3 times. And so I was like, all right, I'll just add back my position. I figured that we were going to start going higher because of how much attention it had today. That's one of the biggest mistakes you can possibly make as a trader. I only had one reason why I added my position back, and that was because I just assumed, because we didn't sell off faster, that we were going to start going higher, and that's why I added my position back. That's one of the worst mistakes you can make as a trader, is feeling like something's going to move a certain way and buying it, and only having that one reason to buy it. That usually never works out. As day traders, we should always have at least 2, 3, 4 reasons to buy something, because we want to make sure we stay green, right? We want to make sure that we're always building more margin in our portfolios. We're always growing our portfolios. And to do that, you always have to have numerous reasons why you should buy something. So let's go ahead and look at a perfect example of just that. So right when this dip happened here, this bearish candle here, I went ahead and added 200 shares. I'll show you why I did that. Once this dip happened here, that was confirmation that we were turning around. We were breaking out of this bullish activity. Because of that, I instantly threw a Fibonacci retracement on the stock, and I threw it on our high for the day and our low for the day. And you can see here that this dip right here ended up being the 61% level. So I added a couple hundred shares there, and I watched this stock for a while to see how the market was respecting Fibonacci, and it was actually respecting it very well. You can see we've had some nice bounces off support and resistance here, And because of this, I started looking for numerous reasons where my entry point should be to make a correction in the stock. And that was all the way down here at $11.14 on the 23% level. Now, why did I buy here? Well, I had this Fibonacci charted way before the stock even got to this point. And by looking at the price action, measuring everything, there were numerous reasons to buy it here. And when it dipped here, we bought 2,800 shares and sold all those shares up here for about $750 gain. Now, we have a reason to buy this because of Fibonacci support. We also have a reason to buy it because of market consolidation at the open today. You can see there was lots of attention on the $11 level, or excuse me, $11.15 level. That's two reasons. This was also the initial start of a massive bull run that happened right here. That's three reasons why we should buy right here. And a fourth reason was we were creating some kind of descending wedge that the market was trading in right here. So we have double support. We have early trading hours consolidation. We have the initial beginnings of a massive move. So one reason, two reasons, three reasons, and four reasons to buy right here. You can see why only having one reason to buy something more than likely will not go your way. And the reason that always stinks is because you don't have anything to measure. I didn't have anything to measure this decision with besides a feeling that I thought it was going higher. Thankfully, I don't make that mistake as much anymore. The reason I got faked out there was because this dip happened much later in the day than I thought it would. And so I thought we weren't going to dip anymore. I thought this initial dip back here was going to give us much more margin than it did, and I got faked out because of that. However, right here, there were four reasons to make this trade. I took 2,800 shares and honestly did not stress a second in that trade and was able to add back $700. Now we're still holding 2,200 shares. The reason for that is because I've been planning on swinging this stock for the past week. I've been watching it for a swing opportunity, and I think it's a great long hold. So despite the fact that we are down in our trade today, we're still green on this stock overall for the year. I trade this stock quite a bit, and let's go ahead and look at why I think this is a great long hold. So right now we're at $11.46. One thing that I always look for when I'm swinging a stock is growing revenue. We have fantastic year-over-year revenue growth here. Really, really strong. We have bullish sentiment. We have a bullish industry. And we also have average price targets around $20 to $30, which is double to triple where we're at right now. Typically, I'll take a swing opportunity on a stock if we're like average price target is offering some margin of roughly 30%, and I'll really look for the best entry possible. But this stock is offering even more than that in average price target with growing revenue, with a ton of attention, with bullish sentiment. There's all kinds of stuff going for it. If we look at the 1 year chart here, let me get rid of this Fibonacci real quick. So right now we're at about $11.40. All the way up, let's go past $20 here. We're looking at 80% margin opportunity to average price target. That's absolutely insane with growing revenue. So my sell target for this is going to be our 200-day moving average. The reason for that is because of some price consolidation here and our 200-day moving average meeting up with that. So we're looking to sell at $16. Even if we sold at $16, we still have like 60% margin opportunity. So I consider this sell a very safe price target. So if everything goes our way, that could be a $10,000 trade for us, and it might not get there soon. It could take a little while because of how volatile things are right now. We might need to wait to see volume calm down a little bit and get all of the increased retail traders out of the way, because they're constantly buying and selling. we might need the volume to just slow down a little bit so we can start making more consistent moves, if that makes sense. So it could happen next week, it could happen in a couple weeks. However, I'm pretty confident in this trade, which is why I'm holding it long. And honestly, I wouldn't have added back to my position at the top of that triangle today if I wasn't planning on holding the stock long anyways. I still considered it a very fantastic value at the $11 to $12 area. So I hope you were able to learn a little bit from this video. If you liked it, please click that thumbs up, and please subscribe for more tips and tricks on how to be a better day trader, and if you're just looking to sharpen your skills or whatnot. And I look forward to seeing you guys in the next video. Take care.